Well, so when you look at the NASDAQ and you were talking about we're down in a bear market, something like 40% of the stocks in the NASDAQ are down below 40%. Well, here's a stock, Autodesk, that's down 45% from its peak. But you look at Autodesk's model and its 3D software. It's got 90% gross margins. It's going to have $2 billion of free cash flow this year. So if you look at all the demand that didn't exist in the last 2 years for manufacturing, for architecture, that is going to come through, and we expect Autodesk to grow their revenue double digits and their earnings even higher than that. So here's a stock now trading 19 times cash flow. At its peak was 30 times, and when you go back to 2018 and the 10-year was at 3%, well, the multiple is lower than it is today now than it was back then.
What tells you, and this I'm curious as we kind of walk through all of this, Sara, a question on many people's minds. It's one thing to look at the fundamentals and see, something looks pretty solid. What tells you to buy now instead of waiting to maybe buy it at a lower price?
So I think when you look at a really high quality company that is so free cash flow positive, and you look at kind of all the other companies that have been sold out, because they're just trading at price to sales, this is a company that going forward has a lot of tailwind behind it. I mean, you just look at the perpetual to subscription model that it's done now. You look at the government regulations of moving all these designs to the cloud, and you look at kind of where the demand is going to come from manufacturing and increasing building. Whether you're buying it at 19 and you get a little more, I think you're getting closer to the bottom than you are at the top. And when the market does rebound, this is a high quality company that people will want to invest in.
You have a buy also on the company Verisign, which is in the domain name registry business. Talk me through that one, number one. But number two, how do they get to own the exclusive right to be that registry?
So they have a 6-year contract with the government, and this contract allows them to raise prices up to 7% a year. So normally when you look at what the growth rate is of domain names like .com and .net, which they own, they grow about 3 to 5% a year. So you layer on that another 5 to 7% price increase. And Tyler, we're going into a period where pricing is going to be important, and people are going to look at pricing, and because everything else is getting more expensive, they'll be able to pass these pricing on to their customers. So if you think of top line revenue growing about 10%, and that falling to the bottom line, you're looking at a company that's going to grow earnings double digit, if not higher. And if growth rates for domain names comes even higher than what they were in the past, this is a company that today trades at a little over 20 times cash flow.
You've got a built-in money machine there.
A lot of shares.
I mean, it sounds like you got a built-in money machine. You've got price hikes and you've got growth in the organic business. So let me get this straight. If you and I wanted to go in and become SarataiDomain.com, we'd go to them?
You'd go to them for .com and .net. Yep, they have a 6-year contract with the government to do that. So, a great moat around their business.
All right, I'll call you later about that.
Let's switch gears, Sarat. Talk Peloton, which is on the rebound today because I believe an upgrade one of the firms. But you're saying to fade this recent backup, right?
Yeah, Kelly, when we started the conversation and said, when do you start picking up some of these stocks? When you look at kind of everything that was sold off, and in the last 2 years, it was, hey, let's buy companies that are growing revenue, price to sales, 10, 15 times. Well, Peloton's come back quite a bit, but it's still selling at price to sales. It's going to lose over $600 million of cash this year. And if you look at kind of their business model, well, so much of their demand was pulled forward in the last 2 years. We are in a reopening economy where consumers want to experience going outside. They want to start going to gyms. They want to exercise in different ways. Peloton just changed their CEOs. It's a work in progress. I don't think it's a company that you never buy, but I think given some of the other opportunities, this one's going to take a couple of quarters for the new management to figure out where are the cost savings, where are margins going to improve, because you also got a lot of headwinds with not just inventory, but higher input costs, higher wage costs. And I think this one's a show me story, but it's going to take a couple of quarters before they can actually show that they can execute.
Quick final question, Sarat. I'm going to put you right on the spot. 24 hours until the Fed decision. Any advice to investors?
I think a lot of this is built in already. Fed's going to hike 25 unless they say something normal. I don't think you do anything different. I think the question is really going to be the pace of the hike and what they also say about their balance sheet. So those things are kind of baked in. It's really the exogenous factors we don't know, which is, i.e., what's going on in the geopolitical world at this point.
Absolutely. Sara, great to have you today. Thanks so much.